So let's put down everything together and understand what happens in the market. So there's a general tendency, what people assume is there is an area of resistance. One sec. There's a area of resistance, okay, and there is a area of support. Let me clone this. There's an area of support, and price tends to play between this only. This is what's being explained to us most of the time. And if I have to show you the chart currently, this is the same thing that people are explaining. This is a chart, and as you can see, there has been an area of proper support and proper resistance out here, where prices have somewhere or the other maintained this area of resistance. Okay, you can put it slightly up or slightly down depending upon the manner in which you want to deal. You can put it here, you can put it here, or you can put it here. It's all correct. There's nothing. We only have zones of support and resistance and not a point of support and resistance. So moving ahead, they also call that there is an area of support. Okay, if you look clearly, there is definitely an area of support rather than a point of support. So what happens that market tends to go higher or lower than what you expect. In case we create this area of support, we have often seen that the market may fly up and then fall down and come back here and then start emerging or rising. Why is it so? Why is it so that these areas of support and resistance are not respected? They should be respected if they are strong areas of support and resistance, right? What happens is everyone in the market, not only you and me, but others in the market are also buying and selling at the same time. What they are doing out here, they are putting a buy order somewhere out here. They are putting a buy order somewhere out here, buying out here, buying out here, or buying out here. Okay, and where they are selling or where they are trying to put their stop losses, they are basically buying on these supports and putting their stop losses somewhere out here, somewhere out here, somewhere out here, somewhere out here. Okay, in case the prices move up, what people out here are doing, they are selling it out here, 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 they are selling it out here. And where are these people who have placed a short or sold orders? Where are they putting their stop losses? Right above this area. So, in case market is planning to go up, what it does, it initially absorbs the liquidities of the buy side first and then absorbs the liquidity of the sell side. So that is how this market game runs. What you need to understand is don't trade on the basis of buy areas and sell areas. Rather than that, play on the basis of where the liquidity lies. So the liquidity lies out here, the liquidity lies out here, the liquidity lies out here, the liquidity lies out here. Instead of putting a buy order here, 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 and here, it's better that you put at places where people have placed their stop losses. That can be easily calculated on the basis of the leverages people generally take. They tend to take a 10x, 20x ratio leverage. So you can accordingly plan that if a person is buying at 60,000 or putting a buy order at 57,500, what is going to be its liquidation price in case, or you can just put a 10% liquidation price where they are putting their stop losses, put an assumption out there, place your orders out there. Now, in that very case, you also need to place your stop losses. We put a 1% stop loss, 0.05% stop loss, not more than that. If a trade is gone, it's gone. Take multiple trades, that's fine, but with proper stop losses. You need to put a stop loss whenever you're putting down a trade. So to summarize everything, what I've stated you out here is, first thing, areas of support and resistance. There is no zone of support and resistance. It's a area. This is an area of resistance, and there'll definitely be an area of support. Okay, this will be an area of support. Where do we buy? We buy where people tend to sell. So we're not going to buy out at this level, we're going to buy it out at this level. Where we are going to sell it, we're not going to sell it at this level, we're going to sell it at the higher level. Firstly, you need to understand the trend of the market. If the market is bullish, definitely the buy side liquidity will be taken first and then the sell side liquidity.